Okay, that's just about everybody, so I'm going to go close that poll. Thank you for your participation. Our presenter today is Andrew Johnson. Andy graduated with a master's degree in accounting with an emphasis on taxation from Brigham Young University. He began his career in state taxation with Arthur Anderson. After 4 years there, he partnered with Jerry Peisner, and in 1992, they founded Peisner Johnson and Company. Andy and his family live on a working cattle ranch south of Dallas. He's very active in church and community affairs, including on the executive board of the Circle 10 Council of the Boy Scouts of America. He's also president of the Milford High School Booster Club. Andy is an experienced professional in state and local tax matters. He has consulted hundreds of companies in virtually every industry across the country. He is a member of the AICPA and the Texas Society of CPAs. Welcome, Andy.
Well, thanks, Ashley. Thank you to all of you for being with us today. We're excited around here because it might not reach 100 degrees today. I think the forecast is 99, and so that's nice. Now, not to be picky, but it sure would be great to get a little bit of rain, a lot of rain actually. But we're mindful of those in Colorado. I'm just reading about New Mexico too, under some real flooding difficulties there. But we'd be happy to take some of that rain down here. Well, today we're talking about Nexus, and this is meant to be a beginner introductory course about Nexus. We have actually two classes, much more detailed, very exciting, about the history of Nexus, the evolution of Nexus, how we got to where we are today, why there's a difference between income tax Nexus and sales tax Nexus, and I don't know, all things Nexus. So we welcome you to attend that webinar as well. But today we're talking more about, okay, if I have Nexus, now what do I do? And what am I facing? So let's just define Nexus real quick. Nexus is the minimum connection you must have with the state, or that the state must have with you, in order that they can legally force you to collect their taxes on their behalf or pay their income taxes. That's what Nexus really is. It's that line that's kind of hazy. It's been the subject of many court decisions. Even the U.S. Supreme Court has ruled on this matter. And it has evolved over a period of many years, actually sort of starting around 1940 or so. But the reason why it's gone to court at all is because it's really a constitutional question. If you just back up a minute and say, since when, if I am not a citizen of a state, and I don't have the ability to vote somebody out of office, since when can they force me to pay or collect their taxes? And so it's taxation without representation. And our founding fathers, the framers of the Constitution, they recognized this, and they acted because they wanted to encourage interstate commerce, and they wanted to prohibit the actions states were doing at the time, which was putting burdens on interstate commerce by various taxes and various duties on imports from other states, commerce in the state. So the framers put in the Constitution a specific prohibition against any interference with interstate commerce, and said that any action to regulate interstate commerce is reserved to the Congress. So that's the defense that businesses have used over the years successfully at first, and then less successfully of late, that there is a prohibition against any state taxing items of interstate commerce. And over the years, it has evolved to trying for the court to try to decide, well, there is some line that you cross in which, at which point the state government has the authority to force you to collect their tax. And we're going to call that connection Nexus. And so that's how Nexus even started. Like I say, we have a much more detailed evolution of that in our other courses, so feel free to register for those. But I just want to cover a few important cases that show kind of the last little bit of the evolution of Nexus. One is a 1960 Scripto case in which the Supreme Court held that the use of independent sales reps in Florida by a Georgia company was enough Nexus, even though they were not employees. They said whether or not they're employees or independent contractors, that has no constitutional significance. All right, so independent sales reps created Nexus according to the Supreme Court. Another case that people frequently cite, and if this is the only case they cite along with Quill, then they're missing an important distinction. But Bellis has a very important case because it said that if your only connection with the state is a quote-unquote mail order connection, meaning you just ship goods to that state via common carrier and you have no other activities in that state, then that's not enough activity. So independent sales reps is, but not independent delivery reps apparently. Fast forwarding now to 1987, Tyler Pipe case was doing business or had customers in Washington, and how they got customers in the state of Washington was the use of one independent sales rep, not even an exclusive sales rep. They represented various manufacturers, including Tyler Pipe. And the U.S. Supreme Court held that, yes, even one independent sales rep that is maintaining a marketplace for you, that is enough of a connection. So that was 87. So things were kind of spiraling out of control. You know, it looked like there was no activity you could conduct in the state and not have Nexus. And then 1992, which is the last time, the last year that the Supreme Court ruled on any Nexus case. So we're going back over 20 years ago. Coincidentally, that's the year that our firm began business as a separate firm. So it's been 21 years now. But anyway, in Quill, it was basically a redo of Bellis Hess because they felt like the state of North Dakota felt like the Bellis Hess ruling should be overruled. In fact, that's what the North Dakota Supreme Court said should happen. Well, the U.S. Supreme Court took it up and said, no, this is outside of our purview because it's really a Commerce Clause issue, not a Due Process Clause issue, and that's fully within it's in the Congress's court to decide this. And so therefore we say we're going to keep Bellis Hess as viable precedent, and it's up to the Congress to act further. And so in that vacuum then, the Supreme Court leaving it that way and the Congress having done nothing about it, which is totally within their prerogative as well. I mean, it doesn't say, the Constitution does not say Congress must act. It just says nobody but Congress can act to regulate interstate commerce. So Congress has elected not to. Now recently the Marketplace Fairness Act has passed, at least the Senate. So that's the first sales tax nexus law that's even passed one body of the Congress. So that's kind of where we stand. So in all that, what you have is state governments who need more revenue, always needing more revenue, right? Never need less revenue. And so they say, well, if independent sales reps create Nexus, but not independent delivery agents, what else can we say create? And so here is a list of activities that create Nexus, well-settled Nexus creating activities that I've broken into an obvious category and maybe some that are less obvious to most people. Most people know, and this is kind of what they cling to, that the only way you have Nexus is if you have buildings or employees in a state. Well, yes, those create Nexus, but those are the obvious ones. It doesn't mean that there aren't other activities that definitely create Nexus. We showed those two cases, Tyler Pipe and Scripto, in which independent sales reps create Nexus too. And there's other cases that talk about independent, other independent agency type activities like an independent contractor who does maintenance or repairs or installation. Those are also Nexus creating activities. Leasing property in other states from others or to others that they take into those states would be activities that create Nexus. Making deliveries in your own vehicles, those are other activities. I've got a list that Ashley will most likely make available to you here in your in the GoToWebinar control panel of the 10 Nexus creating activities that are common. In other words, if you conduct these activities in any state, then you probably have Nexus in that state. And then another list of activities that also create Nexus in many states, but not all states. All right, so that's 20 activities. Also got this really cool little interactive Nexus stress test that maybe you'd like to take just to see whether or not you have Nexus. All right, so that's our discussion of Nexus. It's really a Supreme Court coined term. Most states now use that term themselves, but it's fraught with all kinds of gray area because you just have the Supreme Court that's ruled on just a few fact patterns that are unique to that particular case. You don't have a body of law at the federal level with regulations spelling this all out, and so you have a bunch of state laws. And the state laws are subject to the overall, what they think that they could get away with from the Supreme Court. So if you're frustrated because there's not an overall list, I share that frustration, but hopefully this gives you some idea why. But leaving the whole concept of whether or not you have Nexus behind for now, let's assume you do have Nexus, but so what? You know, what does that mean to you? Well, basically what it means is the state now has a legal authority to require you to get registered in their state or get a license to collect the sales tax or pay the income tax. One thing I just want to point out here is once you have sales tax Nexus and you're registered to collect it, then you must collect it on every taxable item you sell, or you must collect something else in lieu of that tax, which would be a valid certificate. Maybe it's a resale certificate from your customer or an exemption certificate. That's a big deal. It's really low-hanging fruit for auditors. They can just come in and say, what sales did you not collect tax on? Give me a list of those. And now give me all the certificates you collected instead of the tax. And so, you know, that's so easy for them. Not a lot of work, and a lot of work for you, little for them, perfect auditor scenario. And then you're left to clean up the mess afterwards. Also, once you've collected that tax, then you have to be filing those regular sales tax returns. I know I kind of gloss over all that like it's so easy to do. You know, you got 10,000, 13,000 jurisdictions with different rates. So believe me, I understand the complexity involved. It's not only just the rates, but deciding whether or not what you sell is taxable is a whole nother matter, and then getting that all put together on the returns every month is another matter altogether. So I sympathize with this. I mean, I don't take joy in that. That's a difficulty for sure, and a cost. So if you think you might have Nexus, what should you do about it? Well, maybe you think, well, let's try to evaluate what's the chance that I would be caught. How do states even figure out companies that have Nexus? Well, they have lots of means at their disposal. One common way would be for that they audit your customers. People are sometimes surprised how many auditors there are and how many sales tax audits are conducted. And the larger states might have 600 to 800 auditors just auditing sales tax. And so the larger companies, I see that we have some with us today, but the larger companies know that they're audited every 3 or 4 years by all the large states, and certainly by their home state. So if you sell to those companies, it's a very good chance that your invoices are being seen. And so if an auditor identifies a company that should be charging sales tax and they're not, or charging use tax and they're not, then they will turn that company in for audit. So that's a major way that companies are found. If companies share information with the IRS, for example, states share information with the IRS, and so states can go to the IRS and say, give me a list of every company that has 1099 payees in my state. And so when they look at that list, they can just see, okay, which one of these payors are not currently registered in my state for sales tax, because they have agents here. That's proven by 1099s. So that's an easy way to do it. States set up their special task forces that, for example, they might station themselves at a truck weigh-in station just inside the border of their state and look at trucks that are coming into the state and whether or not they're registered, or review the traffic at an airport, not an international airport, but a commercial airport, and see when planes have landed and not, or when they've landed and what business they had and were they registered or not. Also, states pay bounty fees to former employees or competitors that know that companies should be collecting tax, but they're not. So there's so many different ways, and if a state does suspect you and they basically found you, then you will get, they'll contact you, and you might get a Nexus questionnaire. That's what I've got a copy of here for you. This is a copy of a California Nexus questionnaire, and it's got lots of questions on it. The problem is, if you get a Nexus questionnaire, it's pretty much too late. Nexus questionnaire means basically the state is aware of you, and they're just trying to formalize what knowledge they have about you, basically get you to admit it, that you have assets in the state, that you're conducting some non-protected activity in their state, and they'll have a response deadline and penalties of perjury. It's a very serious matter if you get a Nexus questionnaire. Matter of fact, Pizer Johnson & Company got a Nexus questionnaire not that long ago. I can't remember what state, somewhere in the upper Midwest, Minnesota, somewhere like Michigan maybe, Wisconsin, somewhere in there. And we were able to respond, no, we don't have Nexus, nor do we perform taxable services. So it worked out fine for us. But if we did have Nexus or we sold taxable goods or services, believe me, we would have been worried. And so when you get these Nexus questionnaires, you're going to see this language, penalties of perjury, language that makes you pause for sure. Because if they find you, then, and you haven't been filing in that state, you don't have the protections of the statute of limitations, because it doesn't run unless you are filing the appropriate returns. So technically speaking, they could go back to the beginning of time on you, the first time you had Nexus in their state, which would be potentially devastating, because that's a lot of potential penalty and interest. As a practical matter, states go back. If you've been doing business in their state for many years, they go back 7 to 10 years. That in of itself is devastating. Right there, without any fraud, penalty, interest and penalties could be 50, 60% in that scenario. So you never want to be in a position of having Nexus and the state finds you first. So, actually, with a poll question.
Votes are pouring in. Okay, it's just about everybody, so I am going to close the poll and share those results. And not a single person disagrees with you, Andy.
Yeah, that's kind of unusual. Usually, at least if they're state auditors, they disagree. But let me see. I don't remember if I saw any state auditors on with us today, but they also agree. Which if they tell the truth, they really agree. So 100% of you at least would agree that states are getting much more aggressive. And I think that's true. It's because of that statute of limitations situation that it doesn't expire because you're not filing, that the problem doesn't go away, it just gets worse with time. So I thought the best way to illustrate some of this would be with some actual case studies from the file of Pfizer Johnson Company, actual situations. Names been changed, in fact, somewhat altered to maintain confidentiality. That's a big deal, of course, to us as CPAs. But first I want to talk about a service company, and they were located just in one state, doing a fine business. Lucky for them, fortunately for them, they got a national contract, and it was with a retailer with many small stores all over the country. You would recognize them. And so it's an exciting time for them. The nature of the services that they perform was repairs and maintenance type services, door breaks, light without the AC that's working, that they are available to be called on as a kind of a service mechanic. And so, they're going to be there within 4 hours or something, So they got it all. They've been doing a great business to get this national contract. And in thinking about it, they realized, well, we're not going to hire people all over the country just to make service this contract. What we'll do is we'll set up a network of other subcontractors that we can use that will perform this service for us. And so they actually did think a little about the sales tax. Of course, they got lots of other concerns in their mind. They got to figure out how to do this profitably, and I don't blame companies for not putting sales tax at the top of their list. It's totally understandable. And they did actually think about it. It's hard to fault them for their logic. It just turned out that what they did was exactly the wrong thing to do and very, very costly in the end. Because what they did is they said, we don't have employees in any of the states. And I don't know if they talked to their CPA. We weren't involved with them at this and got this advice, or if they came up with this on their own. But they made the decision that because they don't have employees in any other state, they don't have sales tax nexus, they can't even register for sales tax, assuming they want to, which they didn't want to. So they didn't charge sales tax on their invoices unless their subcontractor did. They said to themselves, we don't even know if what we do is taxable in these other states, but the subcontractor will know. And if they bill us tax, then that tells us that it's taxable. So we'll mark up their invoice 15%, mark up the tax 15%, and charge the tax to our customer, and we'll just send that tax into our home state. So it's not that they were taxing and keeping the money themselves. In their mind, they were sending it to the government, and everything should be cool. Well, naturally, they got audited. They're performing service for a major company. Their invoices were seen. When you're performing service, the only way to perform the service is actually to be there at these type of services. So clearly they had Nexus. It didn't matter that they were using subcontractors. And so the states went after them. And the first one to find them was, you may not be surprised, was Texas. And Texas said, hey, you are collecting tax in our state. You're not registered. That's a major problem. So you have to pay a huge assessment. Well, the client came back and said, this is when we got involved, or a little bit after this. No, we collected the tax, but we sent it into our home state. So if you could just get it from them, assuming you need to, everything should be fine. Well, state of Texas isn't going to go for that. So they ended up being stuck on the money that they had paid to the other state because it was already expired. And they had to fork out the money out of their own pocket because they couldn't recollect it from their ultimate customer. It was just a total mess and almost fatal to their business because several other states jumped them as well. We were able to mitigate the damages somewhat on Texas and the other states, but it wasn't pretty. But we were able to get them proactively registered in other states and get their system set up to collect the tax so that they didn't face this same nightmare over and over again in every state. But like I said, it almost dealt a fatal blow to the business. So that's not the situation you want to be in. I want to tell you about software companies. Software companies face a daunting, this prior company, the service company is more like a contractor and using subcontractors, and contractors have a real big sales tax problem. It's so hard to figure out what's taxable in all these different states. Well, software companies have the same difficulty because they sell product that some states say is tangible property, other states say it's not. They sell services like maintenance agreements that some say is like selling more software, some say it's not. It's very, very complicated. Well, in this case, these guys manufacture software in one state and then traveled to other states when they sold it and did the actual installation at the customer site and some training. When states audit companies, they always look at software purchases. It's always a big area. So naturally, their invoices show up on audit, and the auditor comes to them and says, "Hey, how long have you been?" Or the next question comes out, "Well, how long have you guys been doing business in X state?" "Oh, for years," they respond. Well, the state says, "Thank you very much. You have Nexus. You need to send us 7 years worth of returns completed with the money." And so again, almost devastating to this business. That's the thing about sales tax. It's different from income tax because sales tax is due whether or not the item you're selling you're even making a profit on, and it's supposed to come from your customer's pocket. But if you don't collect it, then it comes out of your pocket. Another example, totally different, bank bag company. In this case, the bank bag manufacturer did not have Nexus in any other state. They really didn't. No independent sales reps, no subcontractors, and they were selling something taxable, and they were collecting tax, but only in their home, and that was totally legally correct. They really had no option of collecting tax in these other states since they weren't registered. But then their largest customer, national bank, comes to them and says, "Hey, it's our policy that our vendors that sell us tangible property must collect tax in every state where they make deliveries because we don't want to get audited and pay penalty and interest on these purchases. So we want our vendors to charge tax." So our client, not our client yet, but responded to them, "Well, we're not licensed to collect tax, so we can't," hoping to dodge this whole cost, understandably. And so the bank says, "Well, if you can't, then we'll have to give us another vendor." Well, okay, vendor now comes to us and says, "Hey, we don't want to lose this big client of ours, the customer. Can we even collect tax? We're not registered." Well, the answer to that is no, but you can voluntarily register so that you are licensed to collect the tax. And it's just a matter of setting up your systems. Yeah, there's some cost to it, but it's not astronomical, especially now, to get your system set up so you can manage all those rates in all those jurisdictions. You can manage whether you sell as taxable. So it's really very simple to do, and you can keep your customer and stay in business. So that's how we help them. Now, when it comes to selling or buying a company, we get involved on both sides with different transactions. We're either representing the purchaser or the seller. But let me give it to you from the of a buyer. When a buyer acquires another company, whether it be asset purchase or stock purchase, merger, etc., they have to pay attention to what they're getting, because there is such a thing as successor liability to the purchaser. And so they have to be careful that they're not purchasing something with unknown liabilities. For example, if the target company has Nexus in a bunch of different states but was never collecting the tax, then you would be buying something that automatically has a whole bunch of exposure. And you would want them to take care of that before you seal the deal, or at least account for that in a reserve or an escrow or something. So you have to be careful there if you're involved in the sale or purchase of a company, not to buy a lemon, or at least to account for the lemon in your purchase agreement. So that's something to keep in mind. Ashley, poll question.
All right. I have launched the poll. There we go. Okay, sometimes it takes a minute. Okay, it's been about 30 seconds, so I'm going to go ahead and close the poll and share those results.
Sort of equally distributed amongst the various concerns, and nobody has any other Nexus concern. Yeah, what I find is a lot of times people are already solid that employees and buildings create Nexus, but they really were not thinking about third-party contractors. That's the usual one that people are kind of surprised about. This is what I was mentioning earlier, that you want to avoid, when you're consulting with clients or in thinking about this as your own business, when it comes to Nexus, you want to be pretty conservative, in my opinion, because especially Nexus for sales tax, because it's a transaction tax and it's meant to come from your buyer, your customer, you want to collect that tax at the time of the sale, because it will be very difficult and maybe impossible to get it from them later. Maybe they've gone out of business, or you simply can't, you don't have the marketing will to do it, or there's too many small dollar customers. Because if you don't collect it at the time of sale that they would have willingly paid it, then you end up coming out of your own pocket later, and with insult to injury adding on of penalty and interest. So that's the greatest tragedy of sales tax, that you had Nexus and you were selling something taxable, but you didn't realize it, so you did not collect tax at the time of sale. That's what you want to avoid, because if you're not registered, then the statute of limitations is not expiring and the problem gets worse. All right, so that's all the bad news, okay? I realize that so far all I've been telling is bad news, but that's because I want to give you the appropriate level of concern for your clients, for your own business. We've seen too many scenarios where a late sales tax assessment, a sudden sales tax assessment that nobody was planning for, basically wipe out the business. And so that's what we don't want to have happen. And there are ways to deal with this, okay? So first of all, you got to define the problem. Where am I registered now? And for some companies, that's a little, it's a little hard. They don't have the records for it because they've acquired a company or something like that. So at least make a list of where you're currently registered, not where you have Nexus, because you're also going to look at then where else do I have Nexus, because you might be able to look at where you're registered and actually deregister in some places. If you deregister, then you don't have to file in so many places. Just be careful of what they call trailing Nexus, which means if you have Nexus in a state, then you'll continue to have Nexus even after you deregister for some period of time. Just depends on the state laws. Okay, sometimes it's a year. You deregister and you stop collecting tax, but you continue to make sales there. whoops, you get audited 3 years later. All right, so where else do I have Nexus? Besides the states where I currently know, where else? What activities am I conducting? And that's where you can use our Nexus consultation approach, where we have the client fill out a list, kind of do a little bit of a poll question. You know, do you conduct this activity? If so, in what state? And then you can determine where they potentially have Nexus. But then you have to say, but what now? This is all kind of like just broad analysis right now, because you need to also understand, what do I sell in the states? It's very possible what you sell isn't taxable. So in quantifying the problem, you've got to make kind of broad assumptions so that you can just get an overall feel for it, because you're going to say, well, half of what I sell, this is what I sell. I sell some tangible personal property, and I sell some warranty services or some extra installation services. And this is where I sell it, and this is where I have Nexus. All right, well, you make kind of a broad decision on what percentage of what you sell is taxable. So you look at your sales that you didn't collect tax on of things that were taxable, and you can now make a quantification of, you know, what's the tax rate in that state, what's the average tax rate, what's the highest tax rate, and multiply those out kind of like on back of an envelope. This is not a down to the penny exercise. You could spend a lot of time and money calculating it down to the penny. You don't really need to do that at this phase. Also consider your purchases in those states that were not taxed, because that will also be an exposure item. And you'll also look at your income, your net income, how it's apportioned to that state. This is not primarily a webinar about income tax Nexus, but that's still a concern, because you could have some income tax exposure as well. As you do that, you may identify areas, and you very likely will, where vendors overcharge you tax, because vendors are in the habit of just charging tax until someone says something. So don't assume that all tax you pay is automatically due. And if you can identify a refund, you can use that to offset what you're going to have to pay in once you make that quantification. But then, armed with that information, where you have Nexus, whether what you sell is taxable in general, and what's the potential exposure, then you can now set about to fix it, because now you're going to rank your states by potential liability, and then you have a bunch of decisions, potential approaches that you could use. You may decide to do nothing. It may turn out that your exposure is low enough that it doesn't warrant spending any more time in a given state, and that's a very possible, likely outcome in some states. You may decide, okay, you convinced me, we've got Nexus, let's just get registered going forward, not going to worry about the past, let's start collecting tax. Well, that may be okay, but it may be the worst thing that you could do. I'll tell you why. There may be an amnesty program that you could take advantage of, or voluntary disclosures. I'll talk more about that. So you do have some possible approaches available to you. Here's the problem with, I get the approach of, okay, you convinced me we have Nexus, let's just fly right and start it right now, let's get registered, start collecting to get our system set up to collect the tax, let's start collecting the tax. Well, the problem is, and this is why it'd be the worst thing you could do maybe, depending on your back exposure, when you fill out the registration form, there is going to be a question on there that says, when did you first start doing business in our state? And there'll be penalties of perjury on that, and that will be a difficult question to answer. But if you put on there, we started first doing business in your state in 1999, well, then as soon as that state gets that registration form, they're going to thank you very much and ask for all of your taxes back some period of time. Could be 7 years, could be 10 years. So that's why you're automatically in trouble as soon as you do that. It could be very, very, you have no leverage on the state once you do that. You don't have a lot of leverage in their mind anyway, because they're going to find you in their mind, but you have some potential ability to mitigate the overall damages if the state has some sort of amnesty program in place. And you do hear about these from time to time. They're not very frequent. States may individually offer amnesty programs every 10 to 15 years. There's actually some amnesty programs going on right now, and we keep track of these to see if they're a benefit when if we run up against those states. But they're rare. If they're a benefit to you, then it's very exciting. You're going to be doing this jump for joy. But if there's not an amnesty program, then almost every state offers a you come forward voluntarily approach, a voluntary disclosure agreement, in which you go to those states on a no-name basis. So that's usually how we're involved in this. We go to the states on your behalf, no-name basis, anonymously, and we ask for an agreement from them. And the agreement is that they will limit how far back they go to 3 or 4 years, that they also eliminate or reduce at least the penalty and interest. Now, that's kind of the best agreement you can get. Just think of it. If you've been doing business in the state for 7 or 10 years and they agree to only go back 3 years on you, then you have cut potentially in half or more your potential exposure. Plus, registration is part of the process. But it's not available in all circumstances. For example, if you've been audited by the state or you're currently under audit, then voluntary disclosure is not available in most places. Or even if the state has sent you a Nexus questionnaire, that's why I say in some cases it's too late if you get a Nexus questionnaire to take advantage of the biggest mitigation approach we have, which is the voluntary disclosure agreement. So you never want to wait until you get that Nexus questionnaire. If you go this process, then you have to be very careful to comply with all deadlines. It's an actual contract that you sign with the state. The deadlines are critical. Yes, you can get extensions, and frequently you want to take advantage of those for certain reasons. But there is a time frame. You've got to calculate the tax that's due. Try to get that tax from your customers. If not, come out of your own pocket. You got to complete the necessary forms and get all that sent in on time. This is an area that we spend a lot of our practice is helping companies voluntarily come forward and deal with the past exposure. So this is actually an area that we track very closely that I'm aware of. Nobody else has the knowledge base that we maintain our own voluntary disclosure like document, spreadsheet of a whole bunch of different factors and what the state requires, what they will give, who's the contact person, the secondary contact person, what extensions do they allow, what forms do they require. I mean, it's exhaustive, the amount of detail that we track to help our clients with this whole process. But it's like I say, in many cases, the best alternative you have so that you can deal with past exposures and move forward collecting the tax, because that's the next step. Once you deal with your past exposures, and you don't have to deal with it in every state. It may turn out that it's just immaterial in many states. So it's not like you have to go voluntary disclosure in every state. It's just your big states. But once you've addressed at least the prior period exposures, then you can set up your systems to bill and collect the proper sales tax rates and on the proper items. This is a really difficult area to do manually. It's possible, but very, very time consuming. And the software and systems now available are really phenomenal and shockingly low cost compared even to 5 or 6 years ago. So once you've got that process set up, it's not that painful, but it does take some effort. Then you can just it's sort of like set it and forget it. That's kind of how I like to look at it. You're filing those periodic sales tax returns, might be monthly, quarterly, annually, and getting that tax remitted on a consistent, timely basis. And then finally, you can relax. And you can just basically do your work from a hammock in Hawaii, just relaxing, because you know that the sales taxes are being collected appropriately and the sales tax returns are being prepared and sent in correctly on a timely basis. And that's besides doing voluntary disclosures and helping people analyze Nexus and address prior period exposure. That's a service that we offer, very economic, practically free, sales tax return compliance, very efficient when it comes to that. So as a matter of review, let's just talk about what are the costliest mistakes that companies make when it comes to Nexus and sales tax. Well, first of all, just ignoring the situation or being blissfully unaware until the ugly sales tax audit assessment hits. That can be very costly because of that statute of limitations. That problem only gets worse over time. Failing to collect the tax at the time of the sale, that's the biggest tragedy in sales tax. Talked about that probably enough. So that's why I say be conservative when it comes to deciding whether you have Nexus. There's much more to lose than to gain by being aggressive in saying, no, I don't have Nexus. That was Amazon's approach for a long time. It's really all they could do. And now you see them trying to figure out a way to make agreements with so many different states. And basically what they're trying to agree is don't go back on us. That's the big thing that Amazon has to do, because otherwise the potential liability would be enormous. And states would love for Amazon to start collecting tax, and Amazon would love to start collecting tax, in my opinion, not a client of ours. But they have to both be aware of the prior period exposure, and they can't just waive it, because then they'd have to waive it for everybody. So that's the big difficulty of the Amazon situation. That's why Amazon, in my opinion, would be in favor of such a thing as a Marketplace Fairness Act, because it would probably have some grandfather provision in there that exempts you from prior periods. So that's, to me, when you boil it all down, that's what it comes down to. Another costly mistake that companies make is just deciding to get registered because they decided that, yeah, we should be collecting tax. They just get registered without considering the potential exposure in the prior periods. So without putting some sort of voluntary disclosure or amnesty in place, they just get registered. Very, very costly. And then like that service company sending tax to the wrong jurisdiction, that happens more frequently than you might guess. It's just mistakes. But they send it to the wrong place, and then that place won't give it back to them. And then you owe it again to the place where it should have gone. So it's not all bad news. You should be concerned about Nexus. States are very aggressive when it comes to Nexus. They feel like they have almost carte blanche because the Supreme Court isn't doing anything and the Congress hasn't done anything. And in truth, they almost do have carte blanche, so they're being very aggressive. And the biggest target for them is out-of-state taxpayers because they don't catch any political relief from that. So, but it is fixable. You just have to define it, then you can quantify it and fix it state by state. You can take your top 5 states and knock those out. Or you could do all of the states at once. We have the capability to do it all. Usually it's wiser, more practical to do just the bigger states first and then kind of work your way through it. So my overall message is, yes, worry about Nexus, worry about your clients, worry about your company, but it is fixable. You just got to know where the pitfalls are. So with that, I would just, before Ashley, I turn it back to you, I just want to thank everyone for being here. If you have any questions, I'll be around for a few more minutes, of course, to answer those. And of course, at any time, if you would like to consult on any of these matters, I'd be happy to do so. And look forward to working with you. And so, Ashley, with that, back to you.
Thank you, Andy. Yes, if you don't get your questions to us today, feel free to keep in touch. Check out our website, PeisnerJohnson.com. I've posted a few of the charts, but here is a link. I'm going to share a link to the entire list, our hit list, if you will, of other charts. We also have some white papers and case studies that might be relevant, and our state and local tax newsletter. Of course, you know, you can keep in touch with us on LinkedIn or Twitter or Facebook. We'd love to hear from you. In addition to some of the ways that Andy has explained that we work with other tax professionals, you know, in addition to the state tax return filing, we also offer a 16-point refund and exposure review to see if you or your client is over or underpaying sales tax. If you or a client are being audited by the state, we can definitely help you there. We can deal directly with the auditor on the client's behalf, or we can advise you as their trusted CPA as you do. Andy mentioned our Nexus consultation. We also have 2 other programs that are a little bit more in-depth to help you determine if you or your clients have Nexus. We can do a Nexus analysis or a really in-depth Nexus study. We also provide a variety of other compliance-related services like registrations or business licenses, exemption certificates, tax rates and tax engines, and more. So like Andy mentioned, we don't say that we can answer a question off the top of our head. We are happy to do so at no charge. So that's always another way that you can, that we can help you. So keep in touch for sure. Yes, just got a question about the CPE certificate, and I am posting a link for that in the GoToWebinar control panel right now. So for those of you who qualify for CPE, click on that link and download your certificate. I am also posting a link to download the slides for those of you who would like a copy of those for your notes or to review. If you don't grab that in the GoToWebinar control panel, you will receive an email from GoToWebinar in 1 hour, and both those links will be in there. If you have any other questions or any problems getting your certificate or a copy of the slides, feel free to reach out to me and I'll take care of you, okay? Like Andy said, we'll stay on the line for a few more minutes and answer any additional questions that come in. If not, this concludes our webinar. Thanks so much for joining us, and we'll see you next time.